This is undoubtedly going to be the most difficult thing you have ever tried to do in your life. Learning technical analysis is it's if you thought riding a bike was going to be the most difficult thing you've ever done, well, this is like just maybe not as difficult as that. Like, honestly, it's just putting random lines on a stock chart. Okay, now that I've offended 5/8 of the stock gurus out there, and the other 3/8 just don't know that I've offended them. Hi, my name is Mike. Welcome to the channel. Today we're going to be talking about technical analysis, but before we get into that, here on this channel, I try to give you more information to give you a better opportunity at making good and logical decisions inside of your personal finance journey. If you don't mind hitting that sub or the like button on this video, I try to give you interesting tidbits that are kind of easy and really quite simple to grasp. They're not going to be super in depth at this current venture. I'm just trying to get a basis of all the different topics I want to talk about. Those things could be anything from like house buying to retirement to budgeting to anything that having to deal with money inside of your personal life. All of these things in due time, but I try to come out with a video every single Monday. And again, if that interests you, just think about hitting that sub button or like button. It really goes a long way. I do appreciate it. Anyway, let's talk about technical analysis. Okay, so for a basis, basically technical analysis is just trying to recognize trends inside of a stock chart or a specific stock to better interpret or try to predict the behavior of that stock in the future. It's kind of silly in that sense of trying to really grasp a hold or predict what's going to happen because nobody knows the future. I mean, let's be honest. But in a typical sense, there are a lot of different formations that have happened multiple times over the entire history of the stock market that we can see plainly that dictate or at least tend to show that if a certain move is happening or something is going a certain way, the typical outcome is that a reversal happens or something along the other trends. So if you ever heard of the term what goes up must come down, that's usually referring to Isaac Newton's law of gravity in the sense that if you throw something up, then it returns back to its original space. But in this sense, a stock market or in a stock in general, usually when a price goes up, the stock will typically tend to come back down. In the same way that if it goes down, it usually typically tends to come back up. That's not in every instance, and there are many times where something will go up and 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 up. And anyway, so there are times where there's just like a, kind of looking at you in video right now. Anyway, there are certain times when things don't seem to like play by the rules or do things in a certain manner that people are used to. But for the majority of cases, when you see these trends happening, then you can usually predict like, hey, this type of move is coming. And then people go off of that. Now, with all of that being said, if you go and you try to look up some sort of popular ticker, like if it was Nvidia or Meta or Tesla or any of those like Magnificent Seven type things at the very top, Apple, Microsoft, blah, 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 which there's a lot of tech in there. But anyway, even if you decided to go look at that and say like, look at public sentiments, everybody's going to find something different, right? You're going to be able to see the sentiment of one person saying that it's going to go up. And at the same time, you're going to see someone who says, oh, this is going to go down because of this. And so everybody is basically just doing a guessing game in which you're going to have some people that are bulls that are going positive, and there's some people who are going to be bears who are going negative or having a negative sentiment. And so even just understand that in that train of thought, it's going to be very comparable to the sense of you can find someone to back any kind of thesis that you have in any kind of situation. Everybody looking at the chart sees something different, and so therefore they're going to come out with their own hypothesis as to what's happening for that stock at that time. So with that being said, a typical stock will try to recalibrate where its equilibrium is, right? And so what do I mean by that? Basically, if something is moving in a positive direction, there's a time in which those buyers will not want to buy because it's priced too high. And therefore the sellers will step in and start to take profits, in which the stock will the stock will eventually turn back down and come down. And the same way that if it's going down, there's eventual time where the buyers are like, this is so cheap, and start buying it back up. And so basically you can think about the stock always moving in a wave. As it goes up, it eventually gets too pricey and people start selling. And then when it sells off too much, people start buying because it's so cheap, and it starts going back up. Now, like I said before, there are some things that just weirdly don't follow those rules and constantly go up or constantly go down. And those typically go into the idea of fundamentals. There's certain news that comes out, earning reports, any sort of different things of that. Like in cases when a CEO changes for a company, the company's going in a completely new direction, a lot of people who have been in for a while will start to remove their money and capture those gains because we don't know where that is going from here on out. And vice versa, when a CEO changes and the company looks to have a more positive influence, then money starts pouring into the stock and the stock starts to rise. These sort of things, news tidbits about how the company or what the company is doing, can also influence the stock market in many different ways. But even with all of that being said, even, aside from all that news, the news type things of what different companies are doing, we can still be rest assured that as things go up, things usually try to return back, and that equilibrium case comes back where a stock goes up, it comes back down, the stock goes down, it comes back up, back and forth, back and forth. And so off of that, there are these different patterns or different trading trends that come about in those moves that people have seen time and time again play out in a certain direction or a certain way. And this is where technical analysis comes into play. As you can see on the charts, different things happen, and therefore the reaction to those things cause different prices to come into about. And so people try to take those different setups to make certain plays to make more money. Most of these technical analyses are going to be utilized during a day trading type scenario, trying to make a quick buck here and there. It is not advised, I can't advise anything, but I'm just saying, like, if you're trying to just invest in the stock market, this video is definitely not going to be for you. I would just move into something that would be a large index fund or an ETF that has a wide range of the entire market, so that you get to see that money grow over time, but you're not having to specifically worry day to day about how to utilize these things or see these trends in order to try and grow your money in steps where you're making certain plays. But if getting into day trading is kind of your cup of tea, or you're excited, or maybe you wanting to figure out how to do it, I'm just going to go over a broad range of different topics and different setups and trends that you can possibly utilize. I will throw in a few tidbits of words that you'll probably need to look up better to get a better understanding. But for the basis, I'm just going to go over a basic setup of different pieces that you will see regularly when utilizing technical analysis in your trading. All right, so for this video, I'm just going to try and quickly go over what doubles are, head and shoulders, wedges, pennants, triangles, rectangles. All right, and the best way to kind of show these things, I'm going to head on over into the computer and let you guys play around on a chart. I'm just going to kind of show you what I do and play with. I am by no means an expert at this, and I am by no means going to be able to tell you this is the exact method at which you should probably do something, because we're all guessing. We don't actually know. And I just try to figure out what's kind of happening at a certain, area of the stock in order to try and make a good play or make an understanding. Like I said, I don't do this as a full-time anything. I'm not trying to make this a thing, but I do have fun from time to time on days off when I'm not working, to just play something and try and make a move. It's more or less like a gambling addiction type thing. So not advised, especially if you're looking for like retirement or far future planning, but it's a fun little game that I like to play on my Fridays when I'm off work. Okay, so the first thing I kind of want to just go over real quick is just looking at this first image that pretty much pops up on Google when you Google search trading patterns. There's this little tidbit from day trading on Reddit that kind of pops up on this, which just gives an understanding of the different pieces that I was going to kind of show you or whatever, and the idea of what they do. Basically, what you're reading here is the stock movement. If you're looking at my little mouse here, as the stock comes up, there's something called the double top, which is also inversely talked about as a double bottom. But basically, the stock moves up, hits a certain level, retraces a little bit, like we were talking about with hitting that equilibrium. Then it decides to go back up and it retests that same resistance level. And then off of that double top, the stock will move back down, break below the neckline that is associated here with the first retracement. And as it breaks below there, it usually continues going forward. So a lot of people in this scenario would, as you can see here, entry at this point, look for a target of this base down below, which is usually another resistance. We will go into actually looking at some of this if we can find examples, or when I find examples, looking at different stocks. But anyway, you have an entry level. You want a stop loss that we talked about before as it retraces back up. And this would just basically being a negative put or selling a stock short, borrowing a share and selling it short so that you could rebuy back at this target and make that money. But in the same way, a double bottom is that a stock is moving down, will hit that resistance, retrace back to a neckline, and then move back to that second part. And if you see this double bottom form, when it comes back to the neckline, it usually will tend to go backward or, go forward and then continue on to give you a positive play. But in the same way that can possibly happen, there is the opportunity that this, could go the opposite way. It could hit that neckline of that resistance, return back down, and turn something into like this bullish rectangle where it's going back and forth, back and forth, back and forth until it has a continuation. But in the same way that you have that rectangle, it could also inverse and go the opposite direction. And so you never really know what's going to happen. This is why technical analysis is never a science or anything. It's just a guess in which there could be an opportunity for a play that happens in a certain direction. Anywho, so that's your doubles. Your double goes up and hits the same resistance twice and then retraces back to its previous origins, whether it was coming from a bottom up or if it was going from a top down. Okay, next little tidbit would be Head and Shoulders. Same sort of thing happens here where a shoulder gets formed and then the neckline gets hit. A head gets formed. Basically, it's a little bit taller than the shoulder. You have a higher high here. And then it retraces back to that neckline and then it goes back to that first resistance that was hit with the left shoulder. The right shoulder gets hit and it comes back down and makes the continuation down. Again, this could possibly go in a number of different directions. Nobody knows what's happening, but this is a move that gives an entry into a play. Obviously, entry, you have a target and you want to be stop loss, all that sort of stuff. Inversing on that, there is the inverse Head and Shoulders where it comes down, goes up, and then comes back down to make the head, makes the second shoulder, and then continues higher. So in the process of seeing all this, the biggest point is that something starts way down, goes up, and then tries to return back to equilibrium. Something starts up, goes way down, tries to come back to equilibrium. Same thing with the Head and Shoulders. It's just one extra tooth on the doubles. It's just an extra tooth that causes it to come down. So when we talk about wedges, we have rising wedges and falling wedges. Same sort of deal. We have a higher high being produced multiple times and a higher low being produced every single time. So as it goes up, 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 there will eventually be a spot where resistance gets hit and it will break this wedge containment and it will start to move lower, in which you can sell off. In the same way the falling wedge, it goes lower, 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 lower. It eventually breaks this cycle and starts to move higher. That's when you jump in and it starts to move back forward or move up. And so that's, and this is the rising wedge, and the falling wedge is the same thing as a fallen wedge that comes from a upward trend. So there's an upward trend that goes into a falling wedge. That falling wedge wants to go back up because it's been going negative for a while. Same thing with the rising wedge. In this downward motion, it would then want to go back lower because it keeps hitting resistance and it eventually pushes lower. Okay. So there's your double tops, your Head and Shoulders, your wedges. Then we have a couple of things that kind of are, again, completely up to chance and not exactly sure of when it's going, of what's actually happening. Because as you can, when you hit these different resistance levels that keep getting retraced back or pulled back, it can break either way, right? So in this bearish triangle here that keeps going back and forth, it's really close to what a Head and Shoulders kind of look like, right? And so you could see a Head and Shoulders that's happening when someone else sees the rectangle, and only one of you is going to be right. This inverse Head and Shoulders is going to come down, pop back up north. This bearish rectangle is going to come down and then pop south, right? And it's going to keep continuing south while this one's going to go back north, up, down, whatever you want to call it. increase and decrease in value. But anyway, so when you might be seeing this, you might think, oh, that's a inverse head and shoulders, when really it's a bearish rectangle and it continues south. Again, it's a guessing game, right? Nobody actually knows what's going to happen. It's just a guessing game, and you're trying to make a play off of that guessing game in order to do stuff. This is why day trading is highly risky and probably not advised for many people, because you're kind of sitting there having to watch it a lot all the time. But if you ever hear people talk about technical analysis and trying to predict what's happening, this is what they're getting at. This is what's happening. Same idea with the pennants, right? You have this resistance that keeps getting hit, and there is the possibility that it goes lower instead of going higher. It just determines on how much of the volume is going positive or it's going negative, which continues the move forward or it retraces back to where it was before. So in these pennants, you have it continuing up, you have it going lower. And these triangles are pretty much the same thing. Instead of having a falling higher edge that causes the pennant to form, you then have a full resistance at a certain level that has a support that's rising, which usually means it breaks forward, right? You have this resistance that keeps getting hit. All of a sudden it breaks, it will continue lower. So those are kind of your ideas, but even with this particular image right here, they also have the idea that it could break up, and that becomes your entry for your target. Or if it breaks below the supporting, then you have an entry and a target to play either side of that actual movement. Okay, so with all of that being said, let's move over into the actual chart and start looking for some of these patterns and see how stocks have reacted, and just play around with charting and how it goes. Okay, so I'm actually using a site here called tradingview.com. They give you charts and you're able to just kind of look at the entire market. As I type in different tickers here, I can go and look at the SPY. I could look at Meta. I could look at Tesla, and it's showing you all the different charts. This is at the 1 minute. So we're actually looking at a particular stock in general. This is the one that I had up before with Intel. I'm just going to basically show you as this is playing out over the day. This is the last trading day that occurred on the 1 minute for Intel. I'm just trying to give you an idea of what's going on here. So TradingView actually allows me to hit trend lines here. Well, I'm going to actually hit a horizontal line right here. But anyway, you can kind of see here how there is a move here that's always hitting this resistance level. It's just popping up, coming down, popping up, coming down. And then, we can hit a trend line here and say like, oh, we hit the top here and it just kind of slowly came down, and I'm hitting all these different resistance as it is moving down. Now, as we said with that triangle formation back here on a descending, this would actually be an ascending triangle. I don't know, however you want to look at it. But basically there's a top move and a bottom move, right? Basically, we could take an entry at any side of this and actually move toward the top or move toward the bottom, whether you want to consider it to be a descending. I'm guessing it's descending because of the way the point is right here. But anyway, we can see where Intel is actually going to break above this descending line. It then retests that descending line and then makes its move forward. So we have it break down, down, down. Let me zoom in here a little bit. We have a breakdown, down, down. It keeps hitting this, and then it breaks north of it. It retests back to that line and then decides to make a positive move north, right? And so basically what would happen is when it breaks out to this top side, a lot of people would be looking to enter at this point and then hopefully ride this up to make this, 3140-ish area that you would have started at and make it up to 32. And then when you see that resistance kind of hit up here, you would have had that 60 cent raise. And so if you had bought 100 shares, that 60 cents is now $60. And that's just playing shares, right? You could do something that's along the lines of options and stuff, which we will cover in later videos. But anyway, this is basically how technical analysis is working, right? So now we have this resistance that's happening back and forth here. We could hit a trend line that's saying, hey, this is going pretty flat, right? And then we broke below it. So there could be an entry down below, but we also have the idea that we could see a lowering trend here as the minutes progress by, and then it broke north again. So we had another run up, that's a possible to look at. Then we also have the same sort of formation kind of happen again, where there's a resistance that gets hit, excuse me. And then we have that same descending triangle that's happening here. And then as it broke below, people would look to enter. Then you have this fake out kind of happen when you have this guessing game that doesn't really know what's going on, but it re-hits this resistance, right? So there's actually a, okay, I'm just going to use this price range as the piece here, but basically you have this bar of resistance, right? You have something that came down and it hit a couple of different times, and then it's kind of moved forward in between this a couple of different times. So you can see that there is a bottom resistance that's giving liquidity in between this 5-cent range that just kind of moves. It hits that second resistance, gets rejected, and then breaks below it and continues south. Anyway, like I said, it's more or less just like a guessing game in all of this. You can see these different trends where I'm just like poking around, doing different stuff. In the same way, this particular graph is not going to be very good because there's just not enough volume to indicate really strong moves. But basically you have this upward trend that you could do. And then I could sit here and say like, oh, we kind of have a wedge forming, right? That rising wedge. That rising wedge, as it gets up and up and up, is going to break down. Well, we have a breakdown, right? And move lower. Now, this particular chart of Intel is so, I think over the last 8 years that I've been watching it, it has always been between $30 and $50, and it doesn't move very much. You can't see that, it's on the edge over here. But anyway, there's the price of 32 is what it closed at. But it literally has just moved like 30 to 32 over the entire day, right? Whereas if we go to something like Nvidia that has a very large movement area in which we are moving around the 125 area going all the way up to 128. And if we look over the last couple of days, we have 121 that jumps to 128. And I have a whole bunch of different stuff. See, I was playing around with it at different times and trading with it. You kind of have a bear flag that gets formed here and then some resistance that populates forward. And so just trying to chart out like or play around with little stuff. We have another bear flag that happens off that former resistance, but you can see how it like touches that resistance a couple of times and then it comes back down and it plays against that resistance a couple of times until it breaks down going more south off of this bear flag. So anyway, playing along with some of this stuff is just interesting. Let's look at Meta right quick. You have this strong pull forward and it's this is kind of difficult because it's not really hitting that equilibrium that we were talking about. This would be a hard one to play because it just kept going. Then it eventually traced back. But even on that trace back, you can kind of see the little wedge that formed here. You have a negative, but then you have a decreasing negative, right? So you have a little bit of a wedge that kind of formed, which then broke north, but then it came back and it hit this resistance. And okay, so anyway, long story short, all of technical analysis is just a guessing game. That's all that you're playing at, right? You're trying to find different trends and play with different stuff. Sometimes things don't really follow any of the trends at all. And some things will actually play to trends like perfectly. This is back when I was playing Meta before, right? So we had a rising wedge that fell down, but then it came back up. And then we kind of had resistance at different times that I'm looking at. And you can see how it plays off the resistance at different moments and it respects it way down the way. Right. I want to say I played this and made a couple of dollars off of this move right here. I could be wrong. I might have played it earlier and bought this trend right here. But anyway, long story short, with all of it, it's always a guessing game, right? Technical analysis is just going to be a guessing game. Hey, look, a head and shoulders. You can see that right there. We have a shoulder. Let me see if I can, let me get this auto off of here. We have a little bit of a head and shoulders here. It's kind of hard to see, but basically, if I just look at this horizontal, you have the two shoulders being hit, you have the head, and then you have what would be considered the neckline somewhere in around here. So it comes down, it hits that, it goes, makes a neckline, comes back, makes the head, then it comes back and hits the shoulder, and then it continues to go back north. Of course, it's not the best play in the world on this one. It's not a very tightly formed. It's probably easier to see if I zoom out here that it came down, made a head, and then made a shoulder, and then continued. But again, you'd have to hold this all day to really see its full potential. But anyway, these are just things you're guessing. It's a guessing game, and you're playing around with trying to find these different trends. That's what technical analysis is. It's not overly aggressive, and it's not going to make you rich really quick. But if you find a play that you enjoy or that you think is going good, such as this one, you would be entering here at the neckline after it broke it, and then you'd be able to watch it for a couple minutes to see if it populate or, goes north and actually gives you a little bit of money. It's possible, right? That would have given you $5 a share by the end of the day. So not too shabby. So that right there is pretty much what technical analysis is. Again, not exhaustive, not going to tell you every single tidbit of everything. Some things that you might want to look up and / we will talk about in later videos. Fibonacci sequence, or not Fibonacci sequence, but the Fibonacci levels, the Fibonacci retracement. Fibonacci retracement is really big. There are so many different tools on this TradingView website that would help you in trying to understand charting. And things that I don't even know about yet, because I'm still, kind of young in my journey. Only been trading stocks for like 7 years, and I haven't actually been like full forced, trying to figure all this stuff out. I've just picked up a few things along the way. Anywho, like I said, tradingview.com lets you look at the different charts and lets you try to chart different things out to see different pieces. The Fibonacci retracement allows you to see what a move does and where the resistance or the retracement levels are going to come, right? So you have a move from A to B, and then the stock usually after a big move like that will move in between certain levels. I don't know exactly what all the different levels are and where they hit, but I do understand that like when it makes that full 100% move, it tries to retrace back to like 1/3, and then it's possible off of that 1/3 bounce that you would be able to pull to the second, the go from 1/3 to 2/3 of the first movement, or it could, once it breaks that second third, it could go all the way back up and hit all-time highs or move past what it previously ran. Again, don't utilize that very much, and I'm pretty sure I just butchered whatever it was. Correct me in the comments if you know about Fibonacci retracements. But anyway, with that being said, like I said, you're just in technical analysis, you're trying to play a guessing game to try and predict what's going to happen in the future. You're drawing a bunch of random lines on the screen, just trying to give as best information as you can to indicate what a next move would be to make a good play. And this would all be short-term trading, right? You're not going to want to have to utilize this technical analysis on something that would be like a monthly chart, unless you're saying, hey, I'm going to hold this stock for an infinitesimal amount of time while this play on the monthly chart is actually playing out, because these things do form on the monthly indicators or on the weekly indicators. It's just the fact, or it could be, it's all a guessing game. Like I said before, they could transpire, right? You could see a Head and Shoulders form on the monthly, and then 2 years down the road you're like, hey, yay, I did it. But it's like, why bother with technical analysis at that point? You could probably just dollar cost average and be well in the green, because the stock market's always moving up and to the right. Even on the big retracements, it still moves up and to the right usually. So just investing in general would get you where you need to go. So anyway, that's pretty much technical analysis. I've probably made this video a lot longer than it needed to be, and I've just been talking a whole bunch. But I do appreciate you watching. If you do think this was interesting or want to learn more, think about hitting that sub button or the like button, like I've said before in the video. I do appreciate you watching all the way to the end of the video. Have a wonderful day, and I will see you in the next one. All right, goodbye.